Welcome to Context Capital.
Here is a question that is reshaping the entire global economy right now. What if the United States stopped buying from China and started buying from Canada instead? Not just a little bit more. What if Canada became America's go-to partner for minerals? Clean energy from across the country, manufacturing, and modern supply chains? That sounds simple, but here is where things get interesting. But here is where it gets complicated. And here is where it gets really interesting for every business owner, worker, and investor in North America. Because the answer is not yes or no, it depends. And what it depends on could determine the economic future of this entire continent. Welcome back. Today, we are going deep on one of the biggest geopolitical and economic questions of this decade. Can Canada actually replace China for the United States? This is not just an academic question. Right now, we are living through a fundamental shift in how global trade works. The United States and China, the world's two largest economies, have been in an escalating trade war. Supply chains have been weaponized. China has restricted exports of critical minerals. The United States has restricted chip exports to China, and businesses on both sides have been scrambling. At the same time, right next door to the United States sits Canada. It is one of the most resource-rich countries on Earth, with a shared border, a shared language, a shared legal system, and decades of integrated trade history. This matters to your wallet whether you are in Toronto or Texas. Whether you are a small manufacturer, an investor, or just someone who wants to understand what is actually happening to the global economy. Let us start with the numbers, because they are staggering. In 2024, the United States ran a goods trade deficit with China of roughly $295 billion. That is the largest trade deficit the United States has with any country in the world. China accounts for around 13 to 14% of all United States goods imports. And here is what makes this relationship so complicated. It is not just trade. China holds roughly $760 billion in United States Treasury bonds, making it the second largest foreign creditor to the United States. These two economies are deeply intertwined. But in recent years, things got dramatically more volatile. Tariffs went up. United States imports from China fell. China retaliated by restricting exports of rare earth permanent magnets and certain semiconductors, nearly bringing parts of the United States auto industry to a halt. The message was clear. The United States cannot keep depending on China for things that matter to national security and economic stability. Here is something most people do not realize. Canada is already America's largest trading partner. Not China, not Mexico, Canada. Canada and the United States trade roughly $900 billion worth of goods and services every year. Canada is the top supplier of metals and minerals to the United States, providing about 18.6% of America's mineral imports. So let us answer the real question. Can Canada replace China? Let us be honest right up front. Canada cannot fully replace China. Not in the short term. Probably not even in the long term across every sector. China is a manufacturing superpower. It has 1.4 billion people and a vast industrial base built over 4 decades. China produces 31% of global manufacturing output. Canada produces less than 2%. China has roughly 800 million workers. Canada has about 20 million people in its entire workforce. For mass-produced electronics or low-cost apparel, Canada simply cannot do it at scale. The labor costs alone are 10 to 15 times higher in Canada. The industrial ecosystems do not exist in the same way. But here's where it gets interesting and where Canada starts to look like a strategic necessity. Natural resources. Canada has the world's third largest oil reserves and vast natural gas supplies. Critically, they have large deposits of the minerals that drive 21st century technology. Canada is a stable democracy. Supply chains crossing this border move faster and cheaper than almost anywhere else. When strategists talk about the China dependency problem, critical minerals are what keeps them up at night. These are the building blocks of modern civilization: lithium and cobalt for EVs, and rare earths for wind turbines and weapons. Gallium and germanium are essential for semiconductors and radar systems. China supplies 60% of the world's rare earth elements and processes roughly 90% of them. China recently banned exports of gallium and germanium to the United States, sending shockwaves through the tech industry. Now, Canada has reserves of all 12 minerals that NATO identifies as essential for defense manufacturing. Canada holds the world's 6th largest lithium reserves and is the 4th largest cobalt producer. Toronto-based Neo Performance Materials is the continent's sole gallium producer. In 2024, Saskatchewan became home to North America's first commercial-scale rare earth processing facility. They've already produced 40 tons of high-purity metals, targeting 1,000 tons of rare earth magnets by 2028. But here's the honest truth. Canada has the resources, but it lacks scale and speed. Building a new mine can take 20 years. China's dominance took decades to build. Canada cannot replicate that overnight. If the United States genuinely reorients its supply chains toward Canada, the financial impact on local businesses would be historic. For Canadian mining and resource companies, this is the most obvious winner. This is a generational opportunity. New mines would get financed. Processing facilities would be built. The ripple effects of a mining boom would be felt by local suppliers, real estate markets, and service businesses. On the American side, the story is more mixed. Any business that currently imports from China will face a stark reality. It costs more to replace Chinese imports with Canadian alternatives. That gets passed to consumers. But American manufacturers could actually benefit significantly. If supply chains shift back to North America, domestic and Canadian-made components become more competitive. Reshoring creates manufacturing jobs. Industrial states could see a real resurgence. Reshoring creates manufacturing jobs. Industrial states could see a real resurgence. Defense contractors that currently rely on Chinese rare earth magnets would gain access to North American alternatives. Here is the geopolitical wildcard in all of this. What happens if Canada moves closer to China instead of farther away? In 2023, Chinese investors pumped $2.2 billion into Canadian critical minerals companies, up from just $63 million the year before. Canada has since tightened its foreign investment rules, forcing several Chinese investors to divest. But the interest is clearly there. If Canada positions itself as a neutral or China-friendly player, it risks being caught in the middle. The smarter play for Canada is clear. Use its critical minerals as a bargaining chip with the United States, not as a commodity to sell to the highest bidder, regardless of geopolitical consequences. In the best-case scenario over the next 10 years, Canada and the United States deepen their economic integration. A North American critical minerals strategy gets funded. Canada becomes a genuine alternative to China for the materials that matter most. The United States reduces its vulnerability, and Canada's resource sector booms. Good-paying jobs multiply across northern Canada and the American Midwest. In a more realistic scenario, the transition happens, but slowly. Tariffs and political friction create uncertainty. Mining projects face permitting delays, processing capacity lags demand. The relationship strengthens, but consumer prices rise moderately. The progress is real but incomplete. So, can Canada replace China? Partially, strategically, not completely for low-cost manufactured goods. Critical minerals, energy, secure supply chains, defense-critical materials, reliable trade that does not come with the geopolitical risk attached to Chinese dependency. The global trade map is being redrawn. North America has a chance to build an integrated economic bloc with the resources and technology to compete and win in the 21st century. Canada is not just a friendly neighbor, it is a strategic asset. If you want to stay ahead of the curve on the real geopolitical forces driving the global markets and our economy, hit that subscribe button. Drop your thoughts in the comments. Do you think Canada can really step up? I want to know what you think. See you in the next one.